Welcome to DigitalK.
I'm going to kick it right off. We have a panel. It's going to be focused on VC. And we have 4 people here with us. I'm very limited on time, 20 minutes. Going to jump right into it. Very quick intro. Quick word about myself. My name is Tone Vays. I've been in the crypto space for about 6 years. The last 4 of them, I've been doing a lot of public speaking, a lot of keynotes. I run one of the more popular YouTube channels in crypto. Everything is under my name. It's focused on a lot of analytics, price analysis, and also we have some law shows and some of the other stuff. So let's just go through very, very quick intros. We'll start with Lyuben right here and then move on to Saeed.
Cool. My name is Lyuben. I'm partner with LAUNCHUB Ventures. We are one of the seed funds active in the region. We're in crypto since early 2014. We led 2 institutional rounds of economy, and ever since we've been involved with crypto, making deals around the globe, so we're pretty much a big believer and supporter.
Awesome. Saeed?
Good morning, everyone. My name is Saeed Hareb Al Darmaki, co-founder of Alphabit Digital Currency Fund. I've personally been in crypto for the last 2.5 years. The fund's been operating for the last 2 years. I've personally been trading, investing, advising projects as well. So very much involved in the space and very excited about the start of the bull run. I don't know what Tony thinks about that from his trading perspective, but yeah, happy to be here and share a good discussion, hopefully, on blockchain.
Okay, so my name is Nikola Stojanow. I am Bulgarian born, which is amazing to welcome you guys here. Thank you for coming, by the way. Low applause for that.
Thanks
I'm from the founding team of Aeternity blockchain, and over the last 1.5 to 2 years, we have been able to venture out Eternity Ventures, which focuses on investments and acceleration on by now 4 continents, and I'm looking forward to do more.
People are probably bored of me by now. I maybe just add a couple of things. So Outlier Ventures is best thought of as both an incubator and accelerator. We kind of work with very early stage projects, but largely trying to bring them to market and help diffuse the innovation. We've been lead investor and advisor on things like Fetch.ai, IOTA, Ocean Protocol, and several others within that technology stack. And it's great to be here.
All right, excellent. All right, I have 3 topics to cover. We have about 17 minutes to do it. Well, I guess we'll start on that end, so we can keep going, and then we'll go back and forth. So real quick, what have you seen? You saw the ICO bubble pop up, and now it's coming down, and now there's a transition towards the whole STO concept. So can you maybe explain to the audience what have you seen in the space transitioning from the ICO model? A lot of people now are a little scared of it, staying away from it, and transition to STO. How are you seeing this? Go for it.
Yeah, well, I mean, I'd probably say similar to the first speaker, I'm not so interested in STOs. I think they're going to be wonderful. I think they're going to be able to bring huge amounts of liquidity through fractionalization to the alternative asset class. But we'll leave that to the bankers, right? They'll figure that out. I'm still very interested in the concept of a utility token, and as I just said, the ability for these things to coordinate decentralized networks, primarily in the machine-to-machine economy. I guess what we've seen a few cycles. Obviously, with the ICO mania that happened, it was obvious to most of us that the promise of many of these projects was never going to be fulfilled, principally because a lot of them were trying to do it at the application layer, and the infrastructure is just not there, still not there, which is why we focus on infrastructure. And of course, the incentives were misaligned, right? So people were being given obscene amounts of money, typically through things called a SAFT, which was a futures agreement which gave no rights to the investor at all. So they had to hope that the project actually delivered a token, and of course some did. Some probably wish they didn't. And there was no kind of vesting. So a lot of the principles that are well worn in the venture world about how you make sure that people deliver things and both investors and founders are aligned were kind of discarded in this frenzy of effectively people being able to print money, right? And so, of course, if you give people the innovation to print money, you're going to get a lot of people printing money and making scams. And I think that's tarnished the industry. But in the kind of, in the winter, so to speak, and you could argue we're maybe coming out of it a bit now, what's left is people building some really interesting infrastructure that's going to be coming to market this year. Projects that we've worked with have raised privately, sometimes up to 15, 20 million, to build the technology, 30, 40 developers. And we're increasingly seeing people do that through equity. So equity's back in vogue up until the point there is demonstrable utility to birth the network. So we're kind of seeing a hybrid now between classic venture and the ICO.
All right. Nikola?
I think I can agree to most of what you said earlier. I'm going to use a very, very short anecdote to explain how I see this. Back in 2013, when the Aeternity founder, Jaroslav, dragged me pretty much down the Bitcoin rabbit hole, we went out for beers, and he started telling me about this entire system. And first night, unfortunately, we got absolutely drunk, and I didn't understand everything. But the next, something got stuck. And the next day, we met again, and we had the same talk. And I started realizing that you would be able to pretty much, at some point of time, tokenize pretty much anything, and you could put value to literally any kind of asset in the class. Now, this obviously takes time. We have to go through different cycles, like you mentioned also earlier. ICOs were interesting in 2016, 2017. Lots of people made a lot of money. 2018, lots of people lost lots of money. And now we're moving also, as you said, very right, into this hybrid space where you can, on one side, tokenize the asset, but you can also give away equity, which again makes it more interesting for classical investors to start getting a little bit more riskier with their investments, to start pushing into this entire space. So I hope that next year we'll have way more investors and way more funds to be able to support more, and that all the stuff that's being built right now in 2019 will start finding application.
Yeah, I think I want to touch on initial exchange offerings. I think they're getting pretty popular nowadays. I think they've replaced ICOs, but I still think most people think because it's vetted by an exchange and it's listing on an exchange through an IEO that it's going to be a safe investment. But I think you should still do your due diligence, do your homework, and make sure that the project you're investing in is actually sound and will have utility. Like you said about utility, the most important thing if you have a utility token is for people to actually use the token and the network, growing in size as well. So I think IEOs are pretty interesting these days. STOs, I think probably a year or 2 years before you see real liquidity on these tokens being traded. So I think a lot of people are too excited about STOs. I think the infrastructure is still very, very early stage. There's still a lot of development to be done for blockchain protocols that can support tokenizing assets. There's a lot of regulatory question marks as well. There's a lot of legal things that need to be ironed out. So I think STOs are going to be exciting, but probably the next year or two, you'll see a lot of activity there.
And close us out.
And from an investor perspective, what I'm pretty happy with is that I kind of like what happened in 2018 with with the burst of the bubble and going back to the more reasonable valuations. So I kind of see now people being for the right reasons here, building stuff. So this is kind of going back our way, like the VC way, with speaking about the SAFs, speaking about equity. I mean, what we actually see is what premium you pay for liquidity. I mean, the rounds done with equity and the rounds with SAFs are the difference is huge. So from that perspective, we kind of like the hybrid models between SAFs and between tokens and equity. So I mean, going to the right direction.
All right, thanks for that. I know you mentioned utility tokens. Personally, just throw my 2 cents in there. I always have a problem with a utility token that doesn't have a fixed value, and you let the market decide on a fluctuating token on a but if it's a utility token, it should be stable. So that's my minor issue with that. All right, so next topic, guys. What do you see from the retail investor perspective? The VC game has always been for the high net worth individuals through experts in picking these companies, and a lot of them have struggled to beat the S&P 500. How do you see the fact that the retail investor now has similar access because of this decentralized digital technology? Again, I'm a bit critical in this space. When people stand on stage and say you should have had the ability to invest in Facebook, my answer to that is great. Everybody would have lost their money in Friendster and MySpace. So what is your view on the retail investor that can't do the due diligence that Saeed was talking about? So we'll start from this end and we'll go this way.
Again, back in 2017-18, we as VCs, we were also in a position not to be able to do the proper due diligence. You remember how it was. How can I get the allocation? I need to close tomorrow, all this kind of stuff. So kind of, I just think now that actually for the retail investors, they never been in a proper situation to do the due diligence, neither we were. So from that perspective, I would say that more or less retail investors, they always tend to kind of follow the trends, the sentiments. They never get into this like proper due diligence phase. So for me, in my opinion, nothing changed.
Yeah, I think for retail investors at the moment, their way into these projects is through IEOs mostly nowadays. Privately, if they have high net worth, then they can enter privately. But I think there's a lot of options for retail investors to choose from at the moment. The market's liquid, so especially with IEOs, as soon as the IEO's done, then you get liquidity on the secondary market, so the tokens are traded. But like you said about Facebook, yeah, not everybody can get into Facebook, or you have to find these projects really early and know the founders to have access to these early seed round stages. But as a retail investor, you just have to go with what's available on the market and just do as much reading as you can online, or if you have friends who are experts in the field, you can get advice from them as well. So I think there's still options for retail investors, and they can still do some kind of reading on an investment they want to do.
I think it's a two-sided sword, because on one side, now you have access to something which, as you mentioned earlier, you hadn't had before. But if you do not carefully do your due diligence or have somebody else to do it for you, in my opinion, this also opens up the way for very, very high risk. I mean, you're pretty much buying something you don't understand, which if you don't know how to work with, in most of the cases, as we saw last year, is not going to give you what you're looking for. You mentioning IEOs, and quite a lot actually. We have a Bulgarian project that recently successfully did one of the first IEOs, which is incredible. But again, retail investors have to be careful, have to continue to be careful, and should not dive too deep into it, because I still think it's an incredibly high risk. And you should have a technical person that allows you to get proper feedback.
Yeah, I mean, I'd probably build on that in that I think it's both a philosophical discussion and a practical one. So, the philosophical one is who should be able to bear what risk in the venture cycle. And the US obviously has a different interpretation of that than Europe. In Europe, and particularly in the UK, sign your accredited investor and away you go. You're effectively saying, I understand the associated risks. In the US, obviously, there's a higher bar to be an accredited investor, largely oriented around existing wealth. And you can argue, which is the best one. I think ultimately there are definitely pros and cons. So the pro is that you can have, kind of taking crowdfunding to its extreme, you can have the people that you want to bootstrap the network have a stake in that network, and therefore there is an incentive for that to happen in a decentralized way. So that's a clear plus. The downside is, which most projects I think are only just starting to understand, is you are a public company. And there are many private companies that never become public companies because it's a pain in the ass. Look at Elon Musk, his constant frustration with shareholders wanting to look at monthly movements and quarterly when he's trying to build something that is a generational project. And so a startup, before it's even found product market fit, before it knows how the network's going to be used, to be a public company is a lot of pressure, and especially when that's an unsophisticated investor. And so I think projects very quickly start to see the benefit of having sophisticated investors that are locked in to help them versus people ranting at them in a Telegram channel because the price has gone down by 10% because Bitcoin's gone down. So there's pros and cons to it. I personally am very excited by the potential of tokens for crowdfunding and bootstrapping networks, but it does bring a whole new level of risk into the market. And the one final thing I'd say on that specific to security tokens is I think it's a really bad idea to tokenize equity in startups generally, pre-market fit, because 90% of them fail. That's just a fact.
All right, guys, we're down to about 5 minutes. I'm going to ask 2 questions. Pick one and answer it, and then I have a quick lightning round where you give a one-word answer. So my 2 questions are, pick one. Either how do you feel about these pre-ICOs or pre-IEOs where a sophisticated investor can very, very quickly end up dumping that position onto the retail investor before the company ever amounted to anything the moment it goes to an exchange with no KYC? That's one question. And the other one is, how do you feel the VC game is changing with this decentralized open source ability where there isn't going to be that much proprietary and IP to capitalize on?
I'd love to answer both, but I'll go with the first one. So we insist, I can't do one word, sorry, but we insist that our holdings vest alongside the founders, and often that's over 3, in some cases, to 5 years. And so when we're involved in a project, it's a signal to the market that we're locked into it as much as the founders are. So it's easy to navigate around if you want to, it's just most people don't want to, right?
I'll also pick the first one and say that we have done both. From an investor perspective, obviously, and the shareholders, and the first, the quicker question to be able to dump it in the pre-round is better in terms of returns, but you lose this accountability and the support in the project, so we tend to also stay along and drag it along.
Yeah, one word answer to the first question, Lockup. Just lock up the early investors. It's wrong that they can dump ahead of retail investors who's come in later, so lock up. Just a keyword.
Okay, let me pick the second then.
Intellectual property loss.
I actually, as I said, I think it's nothing changes for the VCs. We will play the same game. We'll go and do the due diligence. We're gonna do the stand alongside the teams. We're gonna be locked for specific time, so we cannot dump on the market. I mean, all this kind of stuff, and more we will give the stamp of the proper due diligence and encourage the public to participate on the secondary offers on the public market. So from that perspective, I mean, it's just our game played in another vertical, another segment of the market.
All right, so we got 2 minutes, and we're going to do a quick lightning round for a one-word answer. So the question is, would you prefer to invest in a really good team that you trust or an amazing idea that you really believe in?
It's always the team.
Amazing idea. I'm high risk, so.
Team.
Yeah, team ultimately.
Team. All right. Next lightning round question. I made some notes. Okay. So do you believe in move fast and break things? When you invest, do you want them to deliver something quick, or do you want them to take their time and make something that is
cheap and dirty and fast?
I think liquidity, as long as they can get investors liquidity quickly, then that's key for me.
I think you need to create the groundwork and the basis and then move fast.
That's one of the most important questions, by the way. I'm glad you asked it. Effectively, move fast and break stuff works for startups. It doesn't work for digital economies. It's grossly irresponsible to design something that's going to have billions of dollars of capital on it that's going to break in its first week.
All right, one more. Actually, I have 2 more. Let's see if we can get them both in real quick. if you could have, let's say, a conversation with an entrepreneur or an innovator that is no longer with us, if you can bring him back from the dead for a day, who would it be? And you guys can't repeat the same person. So if someone says Jobs, you got to pick somebody else. We'll start back there.
Satoshi.
Satoshi.
Well, that's a good question. Honestly, I think Stephen Hawking.
Stephen Hawking. Nice.
Entrepreneur,
Anyone that you would want to have a one-day conversation with that is no longer with us?
Michael Jackson, huh?
And somewhat related to our field.
I think Michael Keynes, the economist, right?
Mike Keynes.
Yeah.
Keynes.
No.
Or you mean?
Yeah, Mike Keynes. So somebody who's big in economics, and that's probably who I would be speaking to.
One more.
Somehow related to our
Field.
sector field, I actually cannot think of, so I'll go for the obvious choice, Jobs.
Steve Jobs. All right, last one. I know I'm out of time. Real quick, since you guys have been in the crypto ICO space, can you name your best and your worst ICO investment in the last 2 years?
I actually didn't participate in ICOs. However, I'm pretty happy with what I see with Tezos because of the first proof of stake. And as a bad investments, I mean, I never participated, but most of the Chinese scams I would name as bad investments.
Best one for me is probably MetalPay. It's currently listed. It did well for me. I think the worst ones are the ones that don't list or that you don't see anything come out of it. So, or the dead ones, basically. So,
I think Ethereum was probably one of the better ICOs. Worst, I think, Kick.
Kick.
Yeah, you can't have favorite children, but if we look objectively, IOTA did very well for us, and Fetch is just come onto the market now and is performing really well, and the team are making great progress.